Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today, we have with us Ron Meier, who is a mortgage loan originator with the Bank of England Mortgage. Ron, welcome to the program.
Thank you so much. It's wonderful to be here with you this afternoon.
Yeah, it is so neat to talk to people from different perspectives and backgrounds and what they do and how they serve people. And it just never seems to get old to go, ooh, what led you to the industry? And there's always the fun, interesting stories, or what is your passion about serving people with mortgages or real estate? And so let's get us started off with what is a little bit of your background and your journey through your career and what led you to the mortgage industry.
Yeah, it's kind of an interesting story to get to here. I spent 20 plus years in the sporting goods and mortgage or sporting goods and clothing industry. That changed quite a bit at the latter part of the 1990s. Stepped into the home builder world and worked for homebuilders through up until 2007, 8, 9 when the recession happened, and nobody was buying homes, so I got caught up in one of those reductions in force, and did a lot of consulting for a lot of home builders for the next several years. But I had a friend who was also a member of the Home Builders Association that was doing reverse mortgages. He said, "Ron, come to work with me. Come to work with me. The opportunity's great." And so, right around 2014, I decided to look real closely at that particular opportunity. Found what I liked, what I saw, and got my loan originator's license and jumped in and started doing reverse mortgages with him in 2015. So have continued on and still focus on that older clientele. But the beauty I have right now with my current situation with Bank of England Mortgage is the ability to do all kinds of loans. So it just gives us a lot of variety.
Yeah, I think working with seniors and reverse mortgages is quite the needed niche to work in because there's so much skepticism and confusion. Confusion. And then when someone describes something, then they're skeptical. And then you explain, and then it feels like you're selling them. So let's maybe pause there and kind of dive into a little bit about, how you serve your seniors and what are some of their fears and what are some of the ways that you're helping them to understand that process?
Yeah. And so my role really becomes, as much as anything, is an educator. Yeah. Helping people to really understand what this is, because as you say, this negative connotation has happened with reverse mortgages over the years. And first of all, I have to let everybody know that I work in a highly regulated industry. Not only am I working with a protected group of people age 62 and older, but the mortgage business is very, very highly regulated. So it's not a scam. It's not a fly-by-night situation where the bank's trying to get mom and dad's house or grandma and grandpa's house or anything like that.
Common misconception, right?
Absolutely, it is, Mark. It is, and so it becomes. Coming from a point of, first, let's understand what this tool can do for you. Let me show you the numbers so that then you, as the borrower, can now make an informed decision whether this is the right thing for you to do. So,
I think informed decision and let me show you and educate, all those are terms you've used here in the last minute or two, which are so key because typically people feel like, oh, well, those mortgage lenders, they're just salespeople. They just want to put me into this thing, right? And so I like that approach where you're like an educator and an advocate to help people understand, because people want to buy, they just don't want to be sold. So that educational approach is such a huge opportunity for you. And it's also such a shift in what most of the time people are experiencing these days. They just feel pushed.
Yes, that's absolutely correct. Everybody felt pushed to get that really locked into that really low interest rate, that we were seeing just 65, 90 days ago. Now with this increase in rates that we've never seen this quickly ever in our history. Everybody's now taking a step back and saying, well, can I even afford to buy a house or to refinance or do whatever? And again, it still goes back to looking at the numbers and understanding what this tool can do for someone. And it still may be very, very viable to do a purchase or a refinance, even though the interest rates are higher.
Can you walk us through what is a common motivator for folks to do a reverse mortgage?
Yeah, so the biggest challenge is people are now running out of money. Many now are living on their Social Security income or on their pensions, their para. So they're living on that fixed income. And now all of a sudden their medical bills are starting to go up, which happens as we get older. And they're having challenges finding enough cash in their fixed income to be able to pay all those particular bills and stay ahead of everything. So now they're looking at other alternatives. And that's what's causing many people to take the time to look and investigate how a reverse mortgage might work for them.
Because they may have been in that house for 20 plus years and have it paid off, and it might be worth 600, 700,000, which is a wonderful asset, but they can't access it because it's locked up in their house.
That's right. Yeah. And that's a challenge with home equity is that the only way you can access it is either to sell the house or to put a loan on it. Well, the benefit of that reverse mortgage then is it's specifically designed for that mature home owner so that now they can access that cash, a portion of it, access the cash in their home through this reverse mortgage loan. And no monthly mortgage payment is required, which means that they now have more discretionary income every month.
Yep. So let's circle back to make sure Mark's question is answered about what are some of the points that would make someone consider this. So one you said is like medical bills. So they got a house. It's a lot of equity, whether it's paid off all the way or not, but a lot of equity. Sure. They need access to cash. What are some of the other triggers that might make someone consider? Tell me more about reverse mortgages.
Home repair. Maybe they just deferred maintenance on their home. And now it's basically falling down around their ears. And so they now need to do some repair on the home. That's another big reason. Another reason is for being able to downsize. Many people are still in too big 2-story homes. They are now having a hard time getting up and down those stairs safely. And so now they're considering to be able to buy a more appropriate single level home. And so they can now use a reverse mortgage to purchase that more appropriate home using net proceeds from the sale of their departure home, making a one-time down payment or one-time investment, borrower paid investment of around 60% or so of the purchase price of that home. And then no monthly mortgage payment is required for as long as they choose to live in that home. So it gives them options then that they might not have otherwise or even know about otherwise.
So one question I have is, if you've got a home, and let's just pick the number 500,000 and it's all paid for. So you've got all kinds of equity built up, but locked up, right? Because you built it up by natural amortization and maybe paying extra. So here's your house free and clear. We need to access that. Well, we don't want to sell the house and we might not want to put a traditional mortgage on it. But talk a little bit about unlocking that equity with reverse mortgage versus a home equity line of credit, because that's a common tool, but a home equity line of credit, as you use it, you do have to make payments. So if I'm hearing you correctly, one of the big benefits is a reverse mortgage has no payments, even when you're using accessing the cash.
Correct. And then the additional challenge, Mike, with the HELOC is the fact that, if things turn south, like we saw at the recession or even at the beginning of the pandemic, the banks are going to freeze or cancel those HELOCs to minimize their exposure. So you're at the whim of the bank in that particular situation. In a reverse mortgage, you've got a locked-in contract. Most of these are FHA insured. So you have a certain amount of certainty that you give and housing security, for being able to use this particular product.
And that's a percentage of the value of the house. So
it is. Yeah.
What would
so
happen?
Go ahead.
What happens if the house market drops and now the house is worth a certain amount less? Does that impact then the reverse mortgage at all?
Absolutely does not. That's one of the other beauties and protections of this particular loan is the aspect of this loan is called non-recourse. And so it simply means that the borrower nor their heirs are ever responsible to pay back more on the loan than what the value of the home is at some point in the future. So let's take a short example. Let's say someone bought a house in a neighborhood, and through some zoning changes in that municipality, a big factory was built 6 blocks away from the house. And it now blighted the neighborhood, causing home values to drop. Well, it wouldn't affect someone with that reverse mortgage living in that neighborhood, but maybe at some point in the future, because home values had dropped so much and they lived in that house long enough that now maybe they might be upside down, the home value being higher than the loan balance. And now they need to leave the home. They need to move to assisted living or they passed away. And the only responsibility for the estate to pay back the loan at that point in time would be whatever that future value of the home is. And that's where the mortgage insurance comes into play, because now the lender files a claim against the mortgage insurance policy that's on the home to make up the deficiency balance, the difference, so that everybody is made whole in that particular transaction.
So that's another level of protection.
It is. It's a huge protection for homeowners, and it extends onto their heirs, because many times most home loans, mortgage loans, are recourse loans. In other words, the lender can go back not only after the borrower, after they've had the home repossessed for all that difference, but it extends on to their heirs too. So this is a huge protection for borrowers.
So I'm envisioning in my mind a seesaw. So when you push down on one side, the other side goes up. So in that scenario, I'm asking this question. Okay, here's all these benefits. Wonderful. Yay. Good. Where's the catch? Because if you push down on one side, then obviously this has to be laden with fees. Or where's the other shoe going to drop? Yeah, and I don't know the answer to the question, but I know that as an uneducated third party listening to this, I know that some of your clients and prospects would go, what is this? So this would be a really good question to go, let's just tell you about, the fees, or let's just tell you about. So how does that work?
Yeah. So, and you're absolutely right that the other side of that seesaw is, as home equity is used up, again, most people choose the no payment option. There are strategies to make payments, but most people choose the no payment option while they're living in the home. And that becomes a negative amortization loan where the loan balance gets bigger over a period of time. And so as home equity is used up, that means there are fewer real estate assets to pass along to heirs. And, again, let's face it, most of our older generation still comes out of the mindset we want to pass something along to our children because that's what their parents did to them. So that's the concept of what they want to do, is have something to be able to pass along. But there may be fewer of those assets to pass along at that point in the future. So that's one downside. The other downside could be the fees of these particular loans are a little higher because of the mortgage insurance that's involved. FHA requires a one-time borrower investment to open up their mortgage insurance policy, and that's calculated at 2% of the appraised value of the home. So take your $500,000 home for an example. You're now looking at $10,000 for that one-time investment. Now, again, those particular fees and all closing costs are part of the loan proceeds available to the borrower. They're all designed to roll into the loan, so they're not coming out of pocket from the borrower.
But that goes to your point about it eats into the equity. And that's logical. Like if you're going to say, please give me a reverse mortgage, I need $1,000 a month in my pocket, then you know that now you owe $1,000 one month, $2,000 the next. You know you're eating at the equity, and that's fine. That's logical. And when you hear closing costs and fees, you think, oh, well, Ron's going to get that 10 grand. Nope. That's a mandated fee from whatever the lending entity is. But let's say FHA, that's not your money. That's not, Bank of England's money. That is just the cost of doing business. And it's not out of the borrower's pocket. It gets factored into the loan, which ties into the equity.
Correct. Absolutely.
Okay, good.
Yeah. So at the end of the day, these loans can be really pretty inexpensive for people to get into when you look at it from an out-of-pocket expense.
Are there ongoing monthly fees, like regular closing costs, like title insurance and appraisals and things like that? But ongoing, is there anything fee-wise?
There will be in the FHA insured loans, in the fact that there's always a mortgage insurance premium. Now, what's unique in these loans is the lender pays the annual mortgage insurance premium to FHA to make sure that mortgage insurance policy is always active, protecting everybody in the loan. But it is added to the loan. So ultimately, the borrower is going to pay for that ongoing annual fee. But again, it's not coming out of their pocket during the life of the loan. And the calculation for that's really reasonable. It's 0.5% of the unpaid balance of the loan in any given year.
And that's an annual fee, and maybe it's applied monthly or whatnot?
It's probably calculated monthly, but I believe the lender pays it in annually. But it's a monthly calculation on the.
So 0.5% annually. So in that same $500,000 would be like $2,500 per year. So about $200 a month ish is growing. Their balance is growing. They're eating into their equity that way. But it's kind of like if you need the money, you need the money. If you can't survive, and your heirs should look at it by thinking, well, it's either we do this and lose out on some inheritance down the road, whenever that is, or we're going to kick in out of our back pocket to help mom and dad out with their medical. So it's one or the other.
It is. Absolutely. It is. Yeah. And I think that most adult children, when I talk to them, would rather allow and help and enable mom and dad to use their own home equity than to subsidize their retirement out of their pocket.
Yeah. So let's say that mom and dad do this. They understand it. They move forward, and it really eases some burdens on all of the expenses they need. And let's say that 5 years down the road, they decide to sell the house and move into wherever they're going to move, another home or a retirement community or whatnot, but they need to sell the house. Well, then what's the process there? Because isn't this just a simple, let's get a payoff on whatever the balance is at that moment, and we move forward just like a regular transaction?
It is that simple.
Yeah.
The reverse mortgage is nothing more than a lien against the property, just like any mortgage,
which grows each month, each year, because you're using it. So okay.
So again, it's that simple. You sell the house, you get the payoff on what that loan is, and out of the net proceeds of the sale of the home, the loan's going to be paid off, and the remaining net proceeds are the borrowers to do with whatever they are going to in their next phase of life.
Yeah. That makes a whole lot of sense. Okay, so let's talk about now, when we have understood this is a potential option. What is the time frame? Now, normally, if you're needing this for living expenses or medical or home repairs, there's typically not like I need to close in 28 days because. So typically, it's not really like contingent on 2 or 3 dominoes of closings and moving and all that, so there's not normally a need to have some fast closing, but just give us an idea of, is this a 30-day, 60-day, 90-day process? What is a processing time?
Yeah, sure. Let me make one clarification though, too. As a borrower with a reverse mortgage, they do have some obligations, and their obligations under the loan are to pay their property taxes directly, keep their home insurance in force, maintain their home, and then pay HOA dues if they live in a covenant community. So again, those are the rules and requirements for any homeowner. So
it's not like a traditional mortgage where you make one payment and your homeowner's insurance is taken care of by the lender and tax. You've got to take care of those on your own.
Correct. That's
sounds
the
like
expectation.
No escrows. Yeah.
No escrows.
Yes.
No escrows is right.
Good point.
So to originate and close on a reverse mortgage can take as little as 35 to 45 days. And I've done them that quickly, especially in a purchase situation. Our typical closing time will be probably around 50 to 60 days. And partly it's due to the situation of appraisals and how quickly we can get appraisers out to do the appraisal. If we're looking for a reasonably priced appraisal, it's going to take a little bit longer. Obviously, we can do them more quickly if the borrower is willing to pay more money for that appraisal to be done. But I would say typically around 45 to 55 days is a typical time for a refinance. Certainly shorter time for a purchase.
Good. Well, Mark, any final thoughts you have? Or Ron, is there any other burning question that typically people ask about reverse mortgages that we've not thought of?
I do have a quick question before Ron kind of closes us out. Who qualifies for reverse mortgage? Is there age? Is there equity requirements? Maybe a couple of those.
No, there's not necessarily an equity requirement. Again, this now becomes a situation where someone says, does this make sense for me to do or not? So first of all, let's talk about age. Proprietary loans in some states, not all states, could go as low as age 55. All FHA loans would be age 62 for borrowers on the loan. However, there is a non-borrowing spouse provision for spouses younger than age 62 in that FHA insured product. So, and then as far as equity goes, it makes the most sense if someone has about 50% equity in their home. We know that there probably is enough equity that they don't need to bring money to closing. If it's less than 50%, and maybe they're trying to extinguish a current mortgage, they may have to bring money to closing. And that becomes the challenge is, do they have enough money to be able to pay that $10,000, $15,000, $25,000 lump sum at closing? And many times people self-select that this is not a good tool for me because they don't have those funds to be able to bring to closing.
But you would know that pretty close to upfront because you're explaining and teaching, getting back to that education and guiding. So they would know that. And then maybe the decision before you get into all the paperwork and appraisals, maybe that decision is made on the front end. But I think that gets back to let me help you understand the process. Let's take some basic numbers and explain the process to you.
That's the whole key right there.
Well, did we miss anything, Ron? Is there anything else that your clients ask about reverse mortgages that would be a good, helpful point to cover real quick?
One of the things that I'm seeing a really big trend in is working with financial advisors. Financial advisors are funny that many of them have shied away from talking about reverse mortgages with clients over the years. But because of some of the new rules requiring them to work more in a fiduciary manner with their clients, they now really are required to look at home equity as part of the overall financial plan. And so many financial advisors are now recommending and looking at reverse mortgages and how that will help their client to have a better ability to have enough money to last their lifetimes. So I've been working with a lot of financial advisors lately these days to help them really understand and provide the quotes for their clients to help them work into that. And the whole goal is many of their clients have portfolios of stocks and different things and different investments. And so now it's a reverse mortgage is a way to utilize and to minimize and mitigate the risk of returns that they're getting in their stock portfolio. So it's an interesting conversation to have.
That sounds excellent, because I love working with the team. Let's bring in this person and make sure everyone is on the same page and make sure that we're taking care of that client. So
absolutely,
I think that's so awesome, Ron. What's the best way if someone is listening to this to say, reach out to you and say, tell me more, help me to understand if this could be an option for me?
Yeah. So my best number to reach me is 720-457-2333. 720-457-2333. Or they can send me an email at Ron Meier, Meier, Ron Meier at boemortgage.com.
Excellent. Well, Ron, thank you so much for being on today. It was a real pleasure talking with you.
It's my honor to be part of your podcast. Thank you for the invitation.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show or listen to past episodes, visit www.coloradorealestateleaders.com.